this is going to go up in the credit direction, put us back in balance, bring net income up, meaning that now the credits are beating the debits by 24,980. Net income actually went up there. Now we're going to post the other half of the transaction every time we sell inventory in this case, and that's the cost of the goods sold, meaning we sold stuff, inventory must be going down, and the cost of goods sold must be going up. How much by? Well, it goes up by the sum of now our worksheet. The cost of goods sold, 5,000 plus the 17,600 gives us the 22,600. So I'm going to say negative of this number. So if we post that, what happens? Well, cost of goods sold in V17 equals this 22,600, making the cost of goods sold go up. Once I hit enter, and it'll make net income go down. So notice net income went down in so it went down from a credit. So credits are good on net income, meaning credits are beating the debits. And up here, then we're going to say the inventory is, I'm going to click on here, I'm going to double click on it. I'm going to go to the end of that cell and say plus. I can see that this inventory is already in there. Then I'm going to click on this one, bringing our inventory down to what? 44, which ties out to our worksheet here. So this worksheet is backing up our inventory. And what was the effect on net income? It was the income went up by 35.7 minus the cost of that inventory of 22.6. So we really got net income of 13.1. So let's take a look at the next transaction. I'm going to make sure to put it down here on the next row. And we are now on 318, which says we purchased 120 at $60. So 120 at $60. We're back in the purchase column. And we are now at 318. And we're going to say that we got 120 units tab at $60 tab. Therefore, I'm going to multiply that out with an equals. Left twice, 120 times, left once times the 60, and enter. That gives us the 7,002. I'm going to go back to our ending balance now, and I'm going to pick up any balances we had from the prior period and just copy them down. We only have this one row here. I'm going to highlight that, copy it, and I'm just going to paste it down here. Paste it 1, 2, 3, just the values, so I don't have any formula problems. And the reason I'm doing that is just to put it on the same row. So as of this layer, this is what we have so far. Then I'm going to bring this down underneath it. I'm going to say copy this. I'm going to put it right underneath it. Paste it 1, 2, 3. So these are the two layers that we have at this time. We've got 80 units at $55. We've got 120 units at $60. Note that the price went up again. So our example, we're showing rising prices over time. And therefore, then we can sum them up on this side. I'm going to say this equals the sum of the 4,400 and the 7,200. And so we get the 11,600. So let's go ahead and post that and see what happens on our transaction. On our transaction, we bought inventory, and I'm assuming we bought it on account, meaning we didn't pay cash, we put it on account. How much did we buy? We bought the 720 worth. And that's a debit to inventory, which will increase inventory. I'm going to make my credits negative so that we can put it into this formula over here. And then go ahead and post this transaction and see what it does to our quick little trial balance over here. So in inventory, I'm going to double click on this item in V13, go to the end of it and say plus. I'm going to go to this inventory. This is a debit. This is a debit. It's going to make inventory go up in the debit direction to 11,600, which of course matches our worksheet here. Then we'll go to accounts payable and double click on that, go to the end of it, plus, and then go to accounts payable 7.2, and that's going to make our payable go up in the credit direction, put us back in balance like so. All right, let's see the next transaction that we have on. I'm going to make sure to put it on the next line, which is line 14 in this case. We got 325. We purchased 200 units at $62. So once again, I'm in the purchasing column. I'm going to say that we purchased 200 units, tab, $62, tab. Then I'm going to multiply that out, equals left twice, 200 times left once, $62, and control enter will put us on the same row and calculate it to 12.4. Once again, I'm going to just pull down any current rows from our last segment down to this segment. So we had two layers before the new layer. So I'm going to copy those two. I'm going to paste them 1, 2, 3. And then I'm going to add the new layer, 200 at $62. Copy. I'm going to paste just the values in this case. So we got 80 units at 55, 120 at 60, 200 at 62. Once again, we have rising prices over time. And I'm going to delete this subtotal, which I shouldn't have included. And then I'm going to sum up these three items, these three rows in the dollar amounts. So we'll say equals SUM, sum of the 4,4 plus the 7,2 plus the 12,4, and that is 24. Then if we go over to our transaction, once again, we made another purchase. Inventory is going to go up by how much? By what we paid for it, 12,4. And we're going to assume that we didn't pay for it yet. We bought it on account. And I'm going to say accounts payable is going to go up by the 12,4. And yes, we're going to have to pay our supplier soon because they're probably asking for money, but we'll worry about that later. And at this time, we're going to say that the inventory, I'm going to double click on inventory, go to the end of it, plus inventory is going up by 12,4 and enter. So now we're at 24,000, which matches, of course, our worksheet. Then we'll go over here to accounts payable. What would happen to accounts payable? I'm going to double click on that, go to the end of it. We can see what's in accounts payable now. These are the transactions where we purchased inventory. I'm going to go to this 12,4. Accounts payable goes up to 53,750. Red zero is gone, puts us back in balance. No effect on net income. And we can go to the next transaction. All right, so then I'm going to make sure to go to the next line all the way down here in column 17. And we have on 329 a sale. Okay, so we sold 160 units at 95. All right, so we're going to go to the cost of goods sold column. And remember, once again, we're not talking about the sales price in this worksheet. We're talking about the cost of the goods sold. So we need to know the 160 is what was sold. That 95 is not used in this worksheet. It will be used when we do the journal entry, but what we want to know is not the sales price, but the cost, which would either be 55, 60, or 62. And that's what we will have to work out. So we're going to go into the cost of goods sold section, and we've got these three layers. We sold 160 units. Therefore, we're going to take all of these got wiped out first because we're in the first in, first out method. So therefore, all of these 80 at 55 units are gone. So the 80 times the 55 units are gone. And then I'm going to do it this way. I'm going to say this equals the 160 units that we're selling, this number here minus this 80, means that we need another 80 units to sell to bring us up to the total sales amount. And that, of course, will eat into our second layer of 120. So therefore, these 80 are going to come from the 120 that cost $60. So we're going to say this equals the 80 times the 60. And then we haven't touched this layer at all. So then if I calculate what happened to these layers, this 80 is now gone by these. So I'm going to represent that by saying this 80 minus the stuff that we took out is now 0 at 55. And of course, equals 0 times 55 is 0. 0 times 0, anything is 0. So I'm going to say this equals the 120, the second layer, minus the 80 that we ate into the second layer tab. That means we have 40 left. So of these 120 at 60, we sold 80 of them. Therefore, we have 120 left at a cost of 60. And therefore, we have the 40 times the 60 in dollars, 2,400. And of course, this 200 units, we can just bring down because they have not been eaten into in this transaction. Now I'm going to sum these up. So we have a dollar amount 0 plus the 24 plus the 12.4. So we're going to equals SUM of the 0 plus the 24 plus the 12.4 gives us the 14.8. All right, so let's record this transaction. Now remember, once again, we've got the transaction, the normal transaction of sales, which we didn't even need this worksheet for. We just need these two numbers for the transaction for sales. This is the transaction you usually see in the register when you go to the grocery store or something. We know that we sold equals 160 times the 95 units. And that's going to increase, in this case, accounts receivable, assuming we sold it on account. And it's also going to increase revenue. That's our normal sales transaction for any type of business. And then of course we're going to add to that the new thing being the inventory. So let's post this one first though. And these two things happen at the same time obviously, but it's easier to think of them as two transactions and relate the revenue and the receivable as well as the inventory and the cost of goods sold. So I'm going to double click on the accounts receivable. I'm going to say plus. We're going to go to this 15.2. This is a debit. This is a debit. Making the debit go up. Puts us out of balance. We're going to go to revenue down here. Double click. Go to the end. Plus the 15.2. This is a credit. Revenue is a credit. That's going to put us back in balance when I hit enter. And that'll bring net income up in the credit direction. Meaning the credits of income are beating the debits by 17,580. Expenses are over, income are over the expenses by 17,580. Then we can post the second half, meaning the inventory is going to go down and the cost of that inventory needs to be reported as an expense in the form of cost of goods sold. How much is that for? That's what we have our worksheet for in the cost of goods sold section. The 4.4 plus the 4.8 and negative of that. So that's the debit and the credit. Now we have a cost of goods sold, so I'm going to double click on cost of goods sold. This is an expense type account, even though it doesn't really say expense. It's the expense of the inventory that we're using. This is a debit, that's a debit. Expenses only go up, and that brings net income down. Then we'll go up to the inventory, double click on that, go to the end of it, plus, and we're going to say inventory is going to go down because inventory is a debit balance, that's a credit, goes down to 14.8. which of course matches our worksheet here. What's the effect on net income? It went up by the 15.2, then down by the 9.2. So our net income effect on this transaction of 6,000.